Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you as always for coming on.
Happy to be here.
Well, stocks in New York had their worst day since mid-2020 on Tuesday, of course, but back overnight they were back up slightly. It seems the market does now expect an interest rate hike of 75 basis points or possibly 100. What's the story in the global equity markets?
Okay, well, as you mentioned, on Tuesday, Dow went down by 3.9%, S&P by 4.3%, and NASDAQ went down by 5.2%. And the market seems to be saying that on Tuesday it went down a bit too much. So Dow, S&P, and NASDAQ all gained on Wednesday, but by tiny amounts. Dow by 0.1%, S&P by 0.3%, and NASDAQ by 0.7%. Now, the shock was caused by the August Consumer Price Index inflation report. Actually, the headline inflation was not that bad. It was 8.3%. It was lower than July, and it was higher than expected. The expectation was 8.1%. And if you look at the monthly basis, it went from 0.0% in July to 0.1%. So it wasn't really as bad as what seems to be indicated, but the real nightmare was seen in the core inflation. That's inflation excluding energy and food, and that accelerated. On July, the core inflation rate overall for 12 months was 5.9%. It rose to 6.3%. For a monthly basis, it rose from 0.3 to 0.6. You had very large rises in services, especially for shelter, which went up by 0.7%. And somewhat unusual, previously, most of the U.S. inflation was caused by energy and used vehicles. Gasoline went down by 10% in August on a one-month basis, and used vehicle prices went down by 0.1%, again, on a one-month basis. But the new vehicles started rising, and the price increase for new vehicles was 0.8% in August. So it does seem like inflation is becoming more entrenched, and it's affecting wider areas than before. So that gives Fed the justification to take a big step. So right now the market seems to be expecting a 75 basis point increase when they meet next week. There is about 30% of the survey of answerers who say that perhaps they will raise the interest rate by a full percentage point. But right now the bet does seem to be on a 75 basis point increase. But there is some good news as well. The producers' price index for wholesale prices came out, and it for the month of August it fell by 0.1%, even though on the core PPI rose by 0.2%. But still, the market does seem to be taking this as a bit of a good news. Now, Europe, after a bad day yesterday, DAX, CAC, and FTSE were up in early trading today, but Europe does seem to have more serious problems than the U.S. Eurozone inflation is expected to be 9.1% due to rising energy prices. The European Central Bank raised their interest rates by 75 basis points to 1.25% last week. The UK inflation for August was 9.9%. It was slightly lower than July, which was 10.1%, but they are facing a recession in the fourth quarter, and food prices rising very rapidly. So Bank of England is signaling 75 basis point increase when they meet next week. The Asian economy today, Nikkei was a bit up. Shanghai was down by about 1.1%. Hang Seng is up by 0.5%. But China has held their one-year medium-term lending facility loan interest rate, so it's unchanged at 2.75%. And Japan and China are the only major economies which seems to be either maintaining the rate or even reducing the interest rate all the other advanced countries are now raising their rates. Japanese finance minister is trying to jawbone exchange rates down, arguing that the yen is losing value too quickly, but they're not seem to be in much of a hurry to raise their interest rates.
Yeah, it's an interesting situation. Interesting to see how it works out. Well, here in Korea, the market was up and down today. In the end, lower. Most of the big names down, including Samsung Electronics and SK Hynix, though still holding on to the 2,400 point level on the Kospi. Tell us about the domestic market.
Okay, well, today Kospi lost 0.4%. It ended at 2,401.90. Individuals bought, institutions and foreigners sold. Kosdaq lost 0.2%. It ended today at 781.38. Individuals and institutions bought, foreigners sold. But the action seems to be in the foreign exchange currency market. Korean won during trading rose to 1,397.91 per dollar. And then during lunchtime, there's wide speculation that government intervened because suddenly during lunchtime, the exchange rate fell, and it ended today at 1,393.7. But the market is now widely expecting that breaking the 1,400 barrier is just a matter of time. Another cause of concern for Korean market may be that money is flowing out not only from the stock market, but usually when stock market falls, the bond market picks up. But right now, according to a report by Korea Financial Investment Association, money seems to be flowing out from both stock and bond markets. That seems to be indicating a lack of confidence in most financial investments by individuals. So this is a bit of a concern for the financial market. Year to date, Kospi is down 19.6%. Kosdaq is down 24.7%, and Korean won has depreciated by 17.5%.
17.5%. Wow. Well, oil prices are still significantly lower than what they were earlier this year, but they're a little bit higher today, apparently because of supply concerns. If this winter, when heating gets switched from gas to oil in many places, West Texas Intermediate up about 1.3%. What do you see happening with oil?
Okay, well, sort of a good news here is that even though the prices are rising by bit in the last few days, the overall, though, looking at a bit of a longer view, the oil prices are holding relatively steady. The West Texas Intermediate crude oil for the last month is holding relatively steady at below $90 per barrel. Even though the OPEC has indicated that they will reduce production by 100,000 barrels per day from October. That is such a small proportion of global production, 0.1%, that it's seen more of a rebuke to the United States than trying to support prices back to $100 per barrel. The reason that it is seen as a rebuke to the U.S. is that when President Biden visited Saudi Arabia to try to get OPEC to raise production, they promised to raise production by 100,000 barrels starting in September, but they will be only raising the supply by during 1 month and then returning to the level that it was before the visit. But the current moderate increases in prices seems to be driven by the reports from various organizations that demand will pick up next year. This report includes a report by OPEC, which showed that there may be a 3.1 million barrels per day jump in global oil demand, and then the Energy Information Administration from the United States said that inventory is growing at a slower pace than it did last month, and International Energy Association report shows that even though China has reduced their demand, it will be relatively small this year, and next year the demand will pick up again. So these reports do seem to be pushing up the prices for oil. But again, the sort of the good news that's hidden here is that even though the demand seems to be picking up. The prices are still holding relatively stable below $90 per barrel, at least for now.
All right, Professor, we'll have to leave it there for today. Thank you as always for coming on the program. We really appreciate your insights.
Thank you.